Here at the Kenya Association of Manufacturers, we are very keen on developing small and medium-sized enterprises. That's largely because we see globally and also in Kenya, SMEs form a big part of the economy. They are crucial to whatever happens. Actually, 90% of businesses across the world are small and medium-sized enterprises, and they provide 50% of employment. In countries like Kenya, where we also have informal SMEs who may not be recorded, it's probably higher than that. Unfortunately for us today, we are dealing with the COVID-19 pandemic, and that's had a bigger impact on small and medium-sized enterprises, many of whom do not have financing or the depth of equity to survive through these difficult times. So it's important for us to keep them alive, to keep them going, because they are going to be the lifeblood that keeps us running through these difficult times. At KAM, our commitment is to help them by training, by bringing them together so that they can discuss their issues, and hopefully also helping them strategically plan for the future and for the things that they need to do to be able to survive through not just these difficult times, but also in the future. No big company that has existed did not start as an SME. And so we need to help build our future by building our SMEs. Here at the Kenya Association of Manufacturers, we are very keen on developing small and medium-sized enterprises. That's largely because we see globally and also in Kenya, SMEs form a big part of the economy. They are crucial to whatever happens. Actually, 90% of businesses across the world are small and medium-sized enterprises, and they provide 50% of employment. In countries like Kenya, where we also have informal SMEs who may not be recorded, it's probably higher than that. Unfortunately for us today, we are dealing with the COVID-19 pandemic, and that's had a bigger impact on small and medium-sized enterprises, many of whom do not have financing or the depth of equity to survive through these difficult times. So it's important for us to keep them alive, to keep them going, because they are going to be the lifeblood that keeps us running through these difficult times. At KAM, our commitment is to help them by training, by bringing them together so that they can discuss their issues, and hopefully also helping them strategically plan for the future and for the things that they need to do to be able to survive through not just these difficult times, but also in the future. No big company that has existed did not start as an SME. And so we need to help build our future by building our SMEs. Here at the Kenya Association of Manufacturers, we are very keen on developing small and medium-sized enterprises. That's largely because we see globally and also in Kenya, SMEs form a big part of the economy. They are crucial to whatever happens. Actually, 90% of businesses across the world are small and medium-sized enterprises, and they provide 50% of employment. In countries like Kenya, where we also have informal SMEs who may not be recorded, it's probably higher than that. Unfortunately for us today, we are dealing with the COVID-19 pandemic, and that's had a bigger impact on small and medium-sized enterprises, many of whom do not have financing or the depth of equity to survive through these difficult times. So it's important for us to keep them alive, to keep them going, because they are going to be the lifeblood that keeps us running through these difficult times. At KAM, our commitment is to help them by training, by bringing them together so that they can discuss their issues, and hopefully also helping them strategically plan for the future and for the things that they need to do to be able to survive through not just these difficult times, but also in the future. No big company that has existed did not start as an SME. And so we need to help build our future by building our SMEs. Here at the Kenya Association of Manufacturers, we are very keen on developing small and medium-sized enterprises. That's largely because we see globally and also in Kenya, SMEs form a big part of the economy. They are crucial to whatever happens. Actually, 90% of businesses across the world are small and medium-sized enterprises, and they provide 50% of employment. In countries like Kenya, where we also have informal SMEs who may not be recorded, it's probably higher than that. Unfortunately for us today, we are dealing with the COVID-19 pandemic, and that's had a bigger impact on small and medium-sized enterprises, many of whom do not have financing or the depth of equity to survive through these difficult times. So it's important for us to keep them alive, to keep them going, because they are going to be the lifeblood that keeps us running through.
Good morning. Good morning, everybody. Welcome.
Good morning, Joyce.
Morning. Welcome this morning. Today we are having our first webinar of the year on access to finance for SMEs. And this session will be reviewing the credit guarantee scheme. My name is Joyce Njogu, and I welcome you. And I wish to acknowledge the presence of our CEO, Mrs. Phyllis Wakiaga. Welcome, Phyllis. I also want to acknowledge Mr. Ronald Inyangala, who is the Senior Deputy Director at the National Treasury. Welcome, Mr. Ronald. I also want to welcome Mr. Anthony Kinywa from Cooperative Bank, the head of SME banking. We have Ms. Naomi Ndele, head of SME and Agribusiness, Kenya Commercial Bank. We also have Mr. Geoffrey Hishane, Managing Director, Merge Plus. And all our CAM members, ladies and gentlemen, welcome to this wonderful webinar that we've scheduled today. We are, of course, honored as CAM to organize this in the wake of the announcement from the government on their willingness and support and commitment for helping SMEs access affordable finance, and hence the opportunity that we have created this morning to share, discuss, and even understand from those who have benefited earlier what the opportunities are, the achievements, and any challenges that have been identified, which we can use as CAM to help government to make it as seamless as possible for higher uptake. For those who may not know CAM, it was established in 1959, and it has grown into a very dynamic and credible association that unites industrialists, and hereby also including the SMEs in this growth agenda. We have been at the forefront of driving advocacy and promoting SME development. But before I go into a lot of details, I would like to welcome our CEO, Mrs. Phyllis Wakiaga, to just tell us about manufacturing sector, the growth prospects, and the future we see. Welcome, Phyllis.
Thank you very much, Joyce. Just confirm that you can hear me clearly.
Yes, I can hear you.
Okay, thank you very much. So good morning, ladies and gentlemen, KM members and the guests who have joined us this morning. It's a great pleasure to have you all here as we discuss the Credit Guarantee Scheme. Allow me to recognize the guests who have joined us, the Senior Deputy Director, National Treasury, Mr. Ronald Inyangala, the Head of SME Banking and Cooperative Bank at Cooperative Bank, Anthony Kenywa, the Head of SME and Agribusiness at KCB, Naomi Ndele, and Mr. Geoffrey Gishane, the Managing Director, Marge Class, and all our members. According to World Bank, the credit markets for SMEs are characterized by market failures and imperfections, and up to 68% of formal SMEs in emerging markets are either unserved or underserved by financial institutions, with a resulting gap of about $1 trillion. So the credit guarantee schemes have been used world over to unlock finance for small and medium enterprises. And under a credit guarantee scheme, the government fully or partially guarantees the value of a loan to an SME, which minimizes the risk to the lender, incentivizing the lender to provide credit. The government of Kenya established the credit guarantee scheme in 2020 to support micro, small, and medium enterprises in securing credit from formal lending institutions. The scheme's main objective is to enhance access to quality and affordable credit for SMEs who would otherwise be unable to raise the required collateral for such loans and also face an uncertain and risky business environment. In the financial year 2020-2021, the government actually allocated $3 billion toward the scheme, allowing participating commercial banks to lend at least $12 billion to qualifying MSMEs. The CS of the National Treasury also proposed to increase the capital allocation to the credit guarantee scheme from $4 billion to $10 billion in the budget proposal, and this is really laudable. So in terms of increasing the uptake of the credit guarantee scheme, that's why we are having this discussion here, because the uptake remains relatively low. Treasury statistics show that only 334 businesses accessed loans under the guarantee scheme in the 12-month period through June 2021. So how can we increase the number of SMEs who benefit from the credit guarantee scheme? I think one of them is marketing, to ensure that potential beneficiaries get to know about its existence and how they can benefit from it. And it will also help in getting sufficient business volumes for the scheme in order to make it sustainable. The other one, of course, is capacity building on the technical knowledge in credit analysis, risk management, and portfolio management. The National Treasury and the banks need to collaborate in building capacity in those areas for the staff members of the scheme. On the other hand, financial literacy amongst MSMEs is important in improving utilization of the borrowed funds. Then operational efficiency is also necessary for efficient processing and payment of claims by participating financial institutions for the effectiveness and sustainability of the scheme. There's also a need to put in place measures that will guarantee efficiency to limit frustration by banks, which may arise because of the slow processing of requests or changing of terms in the middle. The other one, of course, is to build trust between the scheme administrators and the participating banks for smooth operation and proper coordination. And this trust can be achieved through continuous consultations, transparency, and accountability in the operation of the scheme. The participating banks should also be brought on board when important operational issues are being discussed. So that's our view, and I believe that all of you, either those who utilize the scheme or who have an understanding of this area, will be able to share ideas on how we can make the scheme more sustainable, how we can get the uptake even higher. So there's a sense of pride for our country and its citizens in attaining self-sustenance and economic independence. And central to this is a thriving small and medium enterprise economy. So I encourage us all to collaborate to create an enabling environment for them for the sustainability of the manufacturing sector and the country's economy as a whole. Thank you.
Thank you. Thank you very much, Phyllis. And we can give a big hand clap from the sides wherever we are. I wish to welcome those who are just joining us. This is a virtual forum to discuss credit guarantee schemes. And we've been joined by various speakers. So I'll invite the next speaker, that is Mr. Ronald Inyangala, the National Treasury Senior Deputy Director, to give us remarks on the government vision on the credit guarantee scheme, the impact, and future plans. Thank you. Welcome, Mr. Ronald.
Thank you. Can you hear me?
Yes, we can hear you.
Can you also see my screen?
We can see the screen and see you as well.
Very well. Let me start by recognizing the CEO of Kenya Association of Manufacturers, Madam Phyllis Wakiaka. I also recognize the president of our partner banks, Anthony Kinyua Cooperative Bank, and Naomi Ndele, and Mr. Geoffrey Kishane, March Blast. I must say we appreciate the fact that you have given us a chance to share with you what we are doing and how we are doing what we are doing. So allow me to take you through this presentation, and then we will have an interaction. So this presentation looks at our vision. In the last couple of months, we have been able to design our vision, where we want to be. We will look at our context, the structure of financing, the risk sharing, and then we will give you a summary of performance. I think is up to 31st March 2022, what we have noted and recommendation, and then the transition arrangements we are having in place. So what is our vision? We want to be a world-class credit guarantor for the growth of MSMEs. That's where we want to be. How do we want to do this? By enhancing MSME access to finance through innovations and partnerships in provision of credit guarantees. So this kind of arrangement is part of what we want to do. These partnerships we are having with the various players on the market, including CAM. What is our general context? We recognize the importance of our MSMEs in the economy, employing about 15 million and doing about 40% of our GDP. There's the challenge of access for credit, for operational growth need, lack of collateral and informality. Of course, also asymmetry of information. Of course, COVID pandemic just worsened the situation, but the National Treasury now set up a scheme. But it was not just the COVID that made us to set up this scheme. This has been a policy objective for government way back from 2012. In fact, if you look at medium-term plan 2 and 3, there is the intention of the scheme way back. But when COVID came in, we were able to fast track by amending the PFM Act 2012 to allow us to use this guarantee and then developing regulations. The CGS was launched on 8 December 2020 by executing agreements with 7 participating banks. Of course, we have ABSA, Cooperative Bank, Reed Bank, EGP, KCB, and NCBM, and Stanbic. This is important for our manufacturers who are on this call to know where do you go to at this point. We intend to bring on board more banks. Of course, we invited all the 39 banks, and then those that applied were evaluated. So the banks will lend due diligence in line with CBK prudential guidelines. As correctly put by the CEO, the government allocated 3 billion as seed capital for the CGS. And in the medium term, we are looking at about 10 billion. And the government is still very committed to this cause. The banks are expected to leverage about 4 times. But of course, this can even be more from our studies from debt schemes globally. How does our product look like? The current design and the product. These schemes aims at maintaining access to finance for MSMEs and protecting jobs. It is for registered MSMEs who are also tax compliant. The risk sharing arrangement is 50-50. With some feedback and someone talking from elsewhere, maybe the organizers can help. The risk sharing is around, of course, 50-50 with a maximum exposure of government to 25. The maximum loan amount is 5 million. Interest rates are market rate with a discount from the lender. The term is about 3 years. Repayment penalties are not allowed. Grace period of up to 5 months, but this is subject to negotiation by the lender. Facility issued upon the scheme entry into force, which happened in December, I think 2020. No guarantee fees. And this is the biggest good thing from government, because all guarantees globally charge a fee. And the scheme that is supposed to be sustainable requires to charge a fee. The standard collateral arrangements, but it is subject to negotiation with the borrower. So of course, all facilities meeting the credit facility criteria must be registered with the scheme on a monthly basis. And I will be giving you statistics up to as of 30th March, I think that 1st March, yes. How do you access? And this is one of the questions I was told to tackle. If you are an MSME properly registered and you fall under micro, small or medium enterprise, you will approach a PFI, the 7 banks that I have mentioned. You'll be evaluated. If you make a business case, they will give you credit, register with us, and then the normal recovery mechanisms will continue. You will only come in when the facility goes bad. What is the status of the implementation? We conducted a feasibility study to inform the guarantee scheme. Then we successfully. There's a JCB talking. There's a JCB.
Somebody could mute.
JCB. There's somebody.
JCB, please mute your line. Sorry, go on, Ronald.
So successfully amended the PFM Act. Previously, you could not guarantee MSMEs. The law only allowed guarantees to go to county governments and then state corporations. So what we did in 2020 is to amend the law to allow guarantees to MSMEs, including for working capital. And it was only for capital projects. So this is quite a big thing that we did by amending the law. Then we did the regulations, invited the 39 banks to participate, an objective criteria of evaluation for the 14 banks that expressed interest. 7 banks which met the criteria were selected, and they are a part of the phase. This I have already mentioned. The scheme was launched on 8th of December by the signing of the agreement. The CS Treasury was there, and he set up an interim scheme management staff, including our team, which I am currently the leader of that team. The scheme steering committee is fully constituted with 3 independent members appointed by the CS. Then we have done a midterm review with the PFIs on 18th of August 2021. Then we did a training on reporting by the PFI 2021, and this produced very good outcomes. We have seen some of the banks that were point low coming up very well after this training. We have also developed some instruments to help us deal with the product. We have an operational manual that have been approved by the steering committee. We have a risk and compliance manual, a claims procedures manual. How do you manage claims? We have an M&E manual and then finance and accounting procedures manual. What is the performance as of 31st March 2022? Very important for us. As of March 2022, we had issued loans to 2139 beneficiaries, and we are 3.34 billion on the market. Out of the 47 counties, we are in 46 counties, but of course there are some counties that have more beneficiaries, like Nairobi, Kiambu, Mombasa, and a few others. And then we are in 11 different sectors. This is important for you manufacturers, but of course trade is still too high, and we hope that all the other sectors will come on board. The scheme also targets to reach women, youth, and persons with disability at a minimum of 30%, but we are only doing 20%. We hope that such initiatives like this can bring on board more women. What are the other key performance indicators? Interesting statistics we have. The loan sizes range from 40,000 shillings. This really means this could be the people at the lower echelon properly. And then we have a maximum, of course, some loan of 5 million have been given. The average loan size is 1.5 million as of 31st March. The interest rates have also been interesting. They have ranged from 9% to 17%, but they are averaging at 13.5%. The loan tenor ranges from 1 to 36 months, but averaging at 26 months. All sizes of MSMEs are accessing. We have 23% of the loans issued to micro, 60% issued to small, and then 17% to medium enterprises. Those are the statistics. Still performance, and this is important. Trade is disproportionately receiving higher allocation. And for the manufacturers, you are doing 2.80. It is our view that we need to do more and get more loans to these other sectors. And for you, I want you to focus on the 2.80 and tell us how best can we make sure that you do access more. And the bankers that are over on this call also tell us, because it is our interest that we grow these other sectors. So let me just measure on the two, the trade and the manufacturing sector for this discussion. 165 facilities have been fully repaid, releasing the guarantee facilities for reallocation. The beauty of a guarantee is that once the loan is repaid, it is available to the next borrower. This is the beauty of this mechanism. Then fully repaid facilities amount to 274 million Kenya shillings. And then as at 31st March, the guarantee utilization was 31%. We have one of the banks doing 60%. So I think, particularly in the months of November, I think some banks really picked up. Of course, the portfolio is still performing, of course, according to prudential guidelines. A few of the products have been reported to be under watch, substandard, and very few under doubtful. So at 98%, the portfolio is still performing at that level. What are the challenges of the current arrangement? One of them, which we note, is low outreach in key sectors such as manufacturing and agriculture, as concentration of allocation guarantees skewed towards trade sector. This is what we need you to tell us how we do this. The slow uptake by women, youth, and persons with disability. We also note that we have not grown as fast as we needed because we needed to have utilized the 12 billion on the market by December last year. Of course, these are other things that could be affecting our way of looking at sectors. The narrow definition of sectors in the banking sector. So this is what we have identified, where like agriculture is restricted to on-farm activities, excluding MSMEs in the value chain. We are having a discussion with CBK to see how this can be resolved through the reporting template. The definition of micro, small, and medium enterprises law may be limiting due to overlap of classification, where an enterprise could be a micro in number of employees, while according to turnover, it should be classified as small or medium enterprise. We are also having a discussion with the MUSEA to see how this can be resolved. This could be a few of the challenges. What are our next steps? We are reviewing the current design to enhance sustainability of the scheme, attractiveness to investors and development partners, and with agility and impact. We also seek to establish a Kenya Credit Guarantee Company in line with international best practices and our local economic context. We will also review some of the applicable policies, laws, regulations to ensure the Kenya Credit Guarantee is appropriately anchored and facilitated for maximum impact. We have drafted, the policy that was done in 2012, we have looked at it and revamped it. We want it to be approved by the cabinet. So the policy consists of 5 sections. We have a legal and regulatory framework, corporate governance, funding and management of capital, operational framework, M&E, collaboration with partnerships. We recognize partnerships are so key. So in our policy, it is very clearly pronounced. We have the policy proposes that the scheme will be anchored in a company. This will be established under the Companies Act, will be limited liability. The initial capital will be financed through budgetary allocation, but we will invite participation of participating banks, development finance institutions, and other private investors. Future operating costs and increment of the capital will be financed through guarantee fees and investment income. Adequate measures will be adopted to ensure safety, sustainability, and growth of liquidity of the KCGC. We have developed article of association, and they will be established as a private limited company under the Companies Act, with the government having the initial controlling shareholding, but will reduce. Private limited liability company will be the most ideal for the Kenya Credit Guarantee Company. It has limited liability, higher credibility for investors, and allows perpetual succession. The shareholding will be limited to 50%. The company will be governed by a board of directors with representation from government and independent directors. We have also developed a 10-year financing model, which includes assumptions on capitalization, guarantee fees, investment returns, leverage, annual payroll, guarantee coverage, ramp rates, and recommend that sustainability of the company depends on the introduction of the guarantee fees, investment of unutilized funds. Another one is onboarding more PFIs and DFIs without increasing capital will affect sustainability negatively. Injection of more capital improves sustainability. That's what the model is suggesting. Then capacity building and technical assistance of demand and supply side stakeholders will improve utilization. Thank you. I think that's my presentation. I'm ready for questions and some interaction, feedback, what you think we can improve. I will be ready to discuss. Over to you, Joyce.
Thank you. Thank you very much, Ronald. That was a very good overview of the credit guarantee scheme for those of us who are not familiar with it. I'd like to also appreciate the National Treasury for spearheading this and taking leadership to support SMEs in this quest for affordable finance. We'll have the question and answers session at the end, so allow me to invite the next speaker so that we have a general overview. So we've listened to the government, and now we are moving on to listen to a beneficiary. We wanted to hear from a beneficiary so that we can see whether we are in tandem with the national plans and the policies. So at this point, I'll invite Mr. Geoffrey Gishane, who is the managing director from MergePlus. He's a beneficiary of the state-backed credit guarantee scheme. Would like to hear his story. How easy was it to access? Has it helped his business? How he has monitored performance of the scheme? Probably the service the service delivery that was shared. Mr. Gishane, welcome.
Thank you very much, the moderator. And Good morning, all the participants. I would like to mention that my company is Nutrilix Limited, which manufactures animal mineral salts, blocks and powder. We were financed to buy a machine for making animal blocks. And after some time, I was given a working capital through the government's credit guarantee, which was, it was very easy to access and except that the limit was too low. We wish to request for a higher limit, maybe up to 15 million. We do products ranging from for the small cows, the calves, to heifers, to milking and meat cows. There is too much competition in the market, mainly because most of the products are imported. So I understood the kind of business people do is importing products from Turkey, Greece, and Germany. So I decided to come in and start production locally. I was in manufacturing before, but I decided to go into the agricultural sector, mainly because many farmers are losing their animals in one line. That most of the products, the good products, are very expensive. Others are substandard, such that even if you fed your animal with the mineral salts, they don't get the right product. So we had to get a nutritionist. We had to get the right products, the right minerals to assist the farmers. We also came up in so that we have a standing and disrupt the market. So to our advantage, we brought the prices down, maybe even up to 50% of what is in the market. And the other thing we do is we train farmers. We have, whenever there is a field day in particular areas, we visit them. And we enlighten them on the way you should be able to feed your animals, mainly on nutritional levels, because we consider a cow cannot get any mineral anywhere. So the farmer is supposed to know that the cow is supposed to be fed minerals by the farmer. The credit guarantee scheme through the government is a great idea. And most of the countries like China, the development of the industries has been brought up by the same kind of financing. The National Treasury did something that is very great to come up with the issue of guaranteeing, except that for the manufacturers, even the small ones, if the credit limit is too little, it will only come into buying raw material, but there are fields like marketing and transport, which we still need to be assisted. And also the systems that will monitor the production to sales. I'm happy that my bank, Cooperative Bank, was able to give me credit in a short time as I required. Because after that, I bought raw material. I had to increase my workforce because I had very little people. So at times when we have orders, we could get stuck because we don't have raw material. We are not able to employ extra staff. But now, at the moment, I'm feeling the only thing that once I finish this loan, the next one I need to be financed a second machine, because once the machine I have currently I'm operating, if it needs service or it has some faults that needs rectification, it will take maybe a week or two. In that time, we are not producing, but the customer is asking for products. So in case I get finance for a second machine, it will mean if one machine is being serviced, then I have the other one still producing. Because it's like vehicles. When you take a vehicle for service, you don't use it. It has to go for service. Even the machines are the same, but the demands and the customers will still demand the product. I don't know. The next one I want to say is we want to engage the farmers in understanding the kind of farming. Like places like Botswana, you will find Botswana, their land is not as big as Kenya, but their beef industry is maybe 3 or 4 times that of Kenya. So how we are looking at how we can be able to train and get into the realization with the farmers on the best way forward, because people move their cows from region to region, but in Botswana they don't do that. They do things like the animals don't go out; they stay in an enclosed area. They are provided with food which is economical rather than taking cows for grazing. It is economical. Maybe the government will come in and maybe be able to assist the farmers to understand they can make more money in feeding the cows when they're enclosed rather than moving them around so that we can succeed in the beef industry. On the dairy industry, the farmers need to get the best breeds. Then the feeds. The feeds, we can't say the feeds the government can control. It's only that the prices of items get very expensive. On the side of the minerals, Kenya does not do any manufacturing of minerals, so all are imports. But salt, locally, salt that which is the main product of and lime, these are locally available, so we don't need to import. It is very expensive to import because when you import, you use our currency, you use our stock, our reserve, which should be left in the country. Because if you import, you use our foreign currency. But when you use local currency, our foreign exchange is made stronger. So I wish the government is able, even the Treasury is able to identify and finance people who do local manufacturing that can stop importation. I think I'll stop at that. I mean, we are in Moranga, Kabati. That is where we are located. We do distribution. Any farmer who has an order, we are able to deliver to them, and we have good products in different varieties. Thank you very much.
Thank you very much, Geoffrey, and the story you've given on NutriLinks. Yes. I like it that you've given us your journey from starting to your challenges for growth and also opportunities. And later on, there will be questions. So please stay with us as we listen to the banks themselves. I'm glad it was very easy for you to access the funds. If you check the Q&A section, there are already questions on how do you know that you should access funds through the guarantee scheme and such things. So please prepare to respond to those. But
Okay.
also, as I welcome the banks, they can respond in their presentations to some of the questions already being asked in the Q&A section.
Okay, thank you.
Yes, thank you so much. And a big hand clap for Geoffrey Eshane for sharing his story. And we look forward to listening to more and more beneficiaries so that, we are able to understand and support the manufacturing sector to access these funds. We've been told we have only accessed 2.8%, whereby traders accessed 77%. And trade people should be supporting our, movement of goods for our manufacturing sector. So how do we match that? So thank you so much. I'd like to welcome Mr. Anthony Kenywa, Head of SME Banking, Cooperative Bank, to also tell us how they've gone through the operationalization of the scheme. And I hope you'll respond to some of the questions that have been asked. Like how can someone approach a bank to get the scheme? How can a bank confirm its worthiness? And do you repay through the bank? So there are a few questions I know in the process of you giving your presentation, you could touch on them. Thank you.
Thank you, Joyce, and good morning. I hope you can confirm, Joyce, you can see my slides.
Yes, we can see your slides as well as see you.
Thank you. So my name is Anthony. I work with Cooperative Bank, and I also want to acknowledge and recognize CEO CAM, Ms. Phyllis, our good customer, Mr. Geshane, Mr. Ronald also from the National Treasury, and also my counterpart from KCB, Ms. Naomi, and all our participants, and say thank you so much for joining in. Indeed, we are happy and honored to be in this discussion, and also building up from where Mr. Geshane has just left. Mr. Geshane is one of our good customers whom we have grown from micro. He's now an SME on his way now to become a corporate, and we wish him all the best. And we're also happy that the government is also to come in and support and provide an enabling environment to the SMEs like Mr. Geshane. So I want to start off my presentation a bit brief on who CoBank is very briefly. The bank operates on a very universal model. I'll just concentrate on the sites. We have three critical divisions that drive business. We have what we call retail and business banking, where we cater for especially the MSMEs, the youth, the consumer customers. Those are catered for, and we have a vast branch network. We also have corporate, government, and institutional banking. This is a division that also takes lead to ensure that we provide agreements and linkage with the government, because we cannot operate alone. So when it comes to matters of CGS and any affiliation or any agreement with the government, then the government and institutional banking comes in handy so that we tie and interlink. We also have cooperative division. We are a cooperative bank, very sound in cooperative movement. We bank 99% of the circles and cooperative societies in Kenya, noting the role that they play. So we have a division entirely to cater for the cooperative movement. And the three divisions now being the business divisions now interlink and work very closely. Of course, we have others, but I will not concentrate. Those are the three. So on SME and MSME, and where now we fall in, it's under retail and business banking, and we serve our customers through the 165 branches we have. We also have now, during COVID, I think most of us, we appreciated the need for moving digitally, and that's why we also have our MCOP Cash, what we call a mobile banking. We have agents over 10,000 we have stationed over there to cater for MSMEs. We have over 580 ATMs, internet banking, contact center, all those. We have not forgotten our friends from the diaspora. So we have a dedicated department that serves the diaspora department, of course, the forces and all those. And I'm also happy to say that we're also growing. I think now we have reached over 8 million customers, which is very good, of which quite a number of those one then falls under MSME. Now, coming to the discussion of the day, we're very happy and thank you so much, Mr. Ronald, on behalf of the government and National Treasury, for the noble idea that you came in to say you were able to give a guarantee through the interested banks. I think when the advert came in, we were the first one to tender for that, and we're happy that we were pre-qualified and you found us fit to run the scheme. One of the things then to say, cooperative bank is very key in growing our MSMEs. Noting the contribution that they are doing, the 40% GDP growth for a country, I think we cannot ignore that. The SMEs who are also listening, the participants, that we play a very critical role. And so when there is a neighboring environment, when there is support, then it becomes easy for us to drive. So for us, then how we have packaged, I will take us through, and I like the questions, how do I access, how do I know I qualify, what do the banks look at, what are the features, why CGS, not the other loans. So I'll take you through, I'll take maybe 5 minutes to take you through on a preposition. We target all the registered. So if you're out there, you're registered either as an individual or as a company operating in any sector will qualify you for that. I think the first thing is you are in business, you are an SME, whether micro, small, or medium enterprise. We give this loan to just make Mr. Gishane did a good elaboration. When he came in, he wanted to purchase some raw materials. He also wanted to do some little bit of expansion. So this caters for working capital, or if you have some liquidity issues within your business, you need to improve your cash flow, you need to pay for your utility bills, this is the right solution for you. Of course, we have very many for us as manufacturers. We have other products that we have. We have structured finance, we have commodity finance, we have leasing, supply chain, distributor financing, asset financing short term. And this one for CGS then comes in handy to solve the last two, that is the working capital and the asset finance. We have a loan limit, just like Mr. Rona took us through. We have capped it at 5 million. That is what we have agreed with the National Treasury, so that we're also able to reach as many MSMEs out there as possible. And for us, what then we have done internally is to say, if you are banking with us or you're coming for us for the first time, then the branch manager across our network is able to advance you a 500 up to 500 if they are not tangible security, if you're using chattel or unsecured, or if you have a tangible security, then up to 2 million that is given under the branch manager. So that helps us to be able to reach out to all the localities, because we are all spread across the country. And also one of the comments that Mr. Gishane then said is it's faster. When you have decentralized the approval remit, then it becomes the turnaround time, or what we call the time it takes for you to get the money, then becomes shorter. The loan tenor is flexible up to 36 months. And the pricing, again, we have taken a cut, noting that this is a special scheme. This is also aimed at ensuring majority of us enjoy and have access to financing. So we do it at 12.5%. The key requirement, you're operating a business, whether a registered business as an individual or a company. And I know as manufacturers, most of us who have these incorporation document, the articles, the memorandum and the like, you're operating a business license. And again, it's also key, the number 3 is the tax compliance, that you're paying and honoring honoring the tax obligation. That's very key, because remember, this is also a guarantee from the government, creating an enabling environment, ensuring that we get easy access. So the three are the qualification, the requirement. If I go to the next one, is to say, how do we go about it? How do I access? This facility is available to both COP customers and non-COP customers. So if you're new to COP or you're not banking with us, we'll just require your 6-month statement from where you're banking. So we don't deny anyone who is not a COP bank customer. So for those of us who are existing COP bank customers, then we're able to pull out the statement from our internal data. And we're also saying that we are also able, even if you are enjoying other facility, either with other banks or even with us, whether working capital, whether asset finance, whether mortgage, noting that this is an arrangement between us and the government, then we are not limiting. We do not limit you to access a second, a third, or a fourth loan, provided then that you are honoring your obligation. When it comes to collateral, we're very flexible. We can come either with a tangible, what we say partially secured. You can say, I'm banking with you and I have this motor vehicle, I have these households, or I'm doing good turnovers with you, or even unsecured. And especially those of us who are loyal to us, those who are banking all their proceeds with us, have a good history, then you're able to give unsecured up to 5 million. This again, this, as I said, this loan run concurrently with the other credit facilities. So we are not limiting to say, since we funded you last year, then you're not able to. Anytime that you feel you have some cash flow gaps, or where you need to acquire some expansion measures, or you want to acquire an asset finance, then we're able to give you, advance you this loan. Already, and I like the statistics already, as a bank, we have reached out to over 800 MSMEs. We have a huge potential to take this. I think we have only done overall the fund as at March has done 2,139. So we have a potential to, noting the number of MSMEs that we have across the country, to enhance this. And again, we have been able to support with over 1 billion working capital and asset finance solution across our 165 branches. And one of the things that then I can also confirm is that with all our branch network, at least each and every branch in each of the region and the county have been able to reach out to disburse a facility or support an MSME. And the focus for us, especially for the remaining part of the year, then is to ensure that we scale these up. The expectation, I think, these are, as Mr. Ronald from Treasury articulated in his presentation, is to say we would want to reach as many customers, MSME customers in different sectors as possible. So for us, when we advance, then it will be very critical for us then to ensure that we are honoring the obligation, so that we can also assist other entrepreneurs. The other expectation is, the more you bank with us, since this is also capped as a limit, the more you bank with us, then the more limit you access. So that's also a plus on your side, that the bank is able to understand and allocate or give you a limit based on the bankings that you're doing. And how do you do this? Just ensuring that then you have a collection and a payment solution that is now terminating to your account in the bank. This will make it easy for you to access, because we have eased the criteria, we have eased the collateral requirement, we have eased the time it takes for you to get money. So it will be very, very critical for us then to consider banking fully and consolidating all your banking with us. How have you been able to reach out and to lend over 1 billion, and how are we willing also to scale this up? We, on every Thursday, And I wish also to take this chance to welcome us. We usually have what we call MSME webinars, where we use that forum to train MSMEs and also do what we call information dissemination. The more we reach out to MSMEs out there, the better for us, so that we're also able to improve in our businesses and also for the betterment of the country. So we organize what we call webinars every Thursday. Those of us who have account with us, those of us who would wish to join us, please, every Thursday, reach out to any of the branch network. We will always have a topical issue that will help you manage your business well. We also do information dissemination of schemes like this one, so that many Kenyans are able to benefit. We also do networking forums. Those of us also in this call will be next week on Thursday, will be in Nyeri, Friday. Join us for a session, because this is where we also come down to the people, to the MSME, listen to you, network with you, get feedback, so that we're also able to improve and also share with National Treasury on areas that we need to improve. And again, business exposure trips that we do just to, for you to be able to benchmark and also enjoy the economies of scale. And we do this, of course, each and every branch. I've talked about 165 branches. Each and every branch has a relationship manager, an average of 3 across the branches. So a total of over 430 relationship managers who are responsible for educating you more, taking you through, looking and advising you on how do you improve on your cash flows, how do you access this fund across our network. So the frontline staff, our relationship managers, are fully trained. We also have an online portal where you can drop in and get all this information, all this presentation, all this information about what partnership are we having with the government, what are the features, how do I get qualified, get to ask a question. We have, if you go to our website or an MSME CoBank portal, you'll be able to get all this information. And lastly, then we're also able to come in and offer other value or value chain financing, so that you retain an ecosystem that you're able to track, manage your cash flow. So again, as I finish, is to say thank you so much, Mr. Ronald, on behalf of the National Treasury and the government. This is a testimonial from our customer, Mr. Gishani, again also from the bank. We cannot overemphasize. We have really seen MSMEs growing. The feedback we'll be looking out for is, how do we move? We have done well. We seem to have cracked it with the other banks on the trade side. How then do we take it? Do we now scale the manufacturing side from 2.8 to a desired level? So I'll also be very keen to hear the feedback and also address any questions. Thank you so much. Over to you, Joyce.
Thank you. Thank you so much, Anthony, for a great overview of Cooperative Bank. And you're lucky to have somebody to share the testimony of the support that you have given. And I know we have an agreement where we can partner in all these topical issues, and we are grateful that you could actually avail yourself to share more stories on what you're doing to support MSMEs. Please stay on. We will have the Q&A session just shortly after we've listened to Ms. Naomi. It's also in our interest as come to create many platforms for SMEs to access different stakeholders. So we also have welcomed the KCB Bank, who are also good in supporting MSMEs. So we have Ms. Naomi Ndele, Head of SME and Agribusiness, who will also share what the bank is doing in helping SMEs access the credit guarantee scheme as one of the 7 banks that are working with the National Treasury and also qualified to participate in the scheme. Welcome, Naomi.
Thank you. Thank you very much for this opportunity. Good morning, everyone. The CAM CEO, Phyllis Wakiaga. distinguished guests, ladies and gentlemen, on behalf of KCB, I am delighted to join you for this year's MSME Virtual Financial Forum. My name is Naomi Ndele, as you have heard, and I am the head of SME and agribusiness at KCB Bank. If you would like to, please let me know if you can see my screen.
Not yet.
Not yet.
We can see you, but not the presentation.
Okay, is it?
Yes, it's now
there
on.
now?
Yes, we can see it now.
Okay, great.
Thank
so I would like to thank the Kenya Association of Manufacturers for convening this forum and extending the invitation to KCB Bank Kenya. It is an excellent opportunity for the government, the private sector, and the manufacturers to network and to share information and collaborate to develop the SME sector in our country. And as KCB, we believe such unique opportunities cast the light on how we can promote and sustain our local manufacturing industry and to thrive and to be competitive. And we recognize the need for collective efforts to champion an enabling environment that promotes the development of SMEs in our country. A lot has been said this morning, and I don't want to repeat myself, but it is important to note that the manufacturing sector in Kenya is really an important cog in the economy. And it is important that even as financial institutions, that we come in strongly to enable the growth of SMEs who in our country actually contribute to the economy in a great way. We all realize that 90% of our businesses in this country are actually SMEs. Actually, 98% of businesses in this country are SMEs. And so they're very central in the development of our economy. So as KCB, we have partnered with the National Treasury in this credit guarantee scheme. And we have taken a keen role to just build SMEs as a bank. When this particular guarantee was announced by the National Treasury, we were greatly honored to be one of the 7 banks as shared by Mr. Inyangala. We did our proposal and it was accepted. And we even went ahead to communicate this particular offer through a campaign we dubbed Get Your Business Back on Track, Get Your Business Back on Track. Actually, that is how we dubbed it, Get Your Business Back on Track. And why did we do this? It was during the COVID season. A lot of the businesses were affected, and we thought it was important to encourage businesses to get back on track. And I know Anthony, my counterpart from COP Bank, has shared what the requirements are. The requirements are exactly the same as what Mr. Inyangala shared. I could probably just run through it very quickly. You need to have good cash flows. You need to evidence that you are truly affected during the COVID pandemic. You need to have tax compliance. You need to have been in business for at least 2 years and to have a clean CRB. Why? Because we need to deal with credit-worthy people. So if you have these requirements that I have shared, feel free to walk into our branches and we will have this conversation. I know I have seen on the chat some questions around what are the requirements of getting access to this particular facility. Additionally, like my counterpart also shared, we looked at it in a very different way. It is working capital and asset finance solution. It can be both secured or unsecured depending on the value. The maximum is 5 million shillings and the minimum loan is 100,000. You can borrow it for up to a maximum of 36 months at an interest rate of 12% and negotiation fee of 2%. So please take note of this. And if you have the requirements that I had shared earlier, feel free to engage us at any KCB bank, and we'll be very happy to walk you through this journey of how to access this particular facility. But I just want to highlight that as KCB Bank, we are cognizant of the importance of MSMEs to the economy, and we are very keen to play to promote the financial accessibility to our MSMEs by putting in place measures that ensure this, the manufacturing sector specifically, remains vibrant and supports the economic growth. So we are at the forefront in supporting Kenya's economy, and truly we are fostering a relationship model with our customers to ensure that the SMEs are able to borrow and meet their business needs. We are keen to ensure that whatever you borrow, you have the ability to pay. We are not in the business of putting anyone into debt that they cannot pay. And so we have ensured that this particular facility is affordable and has low collateral requirements. And we took a step further, like I said, in this campaign we called Get Your Business Back on Track, which we communicated online through the media to ensure that we encourage the uptake of these loans. You may have not seen that campaign because it was running most of last year, but I just want to encourage you that it is back in a different forum. We are calling it Partner for Ground. I'm sure you've seen that in the media right now. And this is all in our effort to support SMEs and working closely with the National Treasury to ensure that the facility, the 12 billion that is out there for access by MSMEs, can actually be taken up. So as KCB, we know that SMEs need more than financing to thrive. And we have gone an extra mile to address some of these challenges and gaps faced by MSMEs through financial literacy, through skills training, through information sharing for different sectors and specific businesses. We also have business development solutions, which we offer through what we call our Biashara Club forum. Here we offer knowledge and information through webinars such as this, through workshops, through networking opportunities, and what we call customer clinics, where you can come and ask as many questions as you can on how we can partner with you in this journey as an MSME. So I don't want to belabor this point, but the facilities that we are offering are very many. Like I said, they could be working capital or asset finance. They could be short-term or long-term. Like I said, up to 3 million for unsecured and a maximum of 5 million. We have a very specific offering for women in business because we realize that women have very unique needs, especially in terms of financial access. We also have agribusiness solutions where we are targeting the different agri value chains, and I was very delighted to listen to Mr. Geshane, who took us through his feeds business. We also have for learning institutions who may not necessarily be in the manufacturing sector, but we also have trade finance solutions and asset-based finance to address all your business needs in your particular sector. I also talked about the Biashara Club. We have the advisory services and networking opportunities in this particular forum, which is you can subscribe as a business person. We have a value chain and retailer financing through an ecosystem we call retailer financing. You could also be in a group where you are doing your manufacturing in a group. Please speak to us because we have investment options and Chama solutions. For those who are operating in a market environment, we have what we call SOCO loans. But most importantly, I want to encourage each one of you, at your convenience, you can also access our digital solutions on your mobile phone or through your internet banking solution, which we have for your convenience. As I conclude, I would like to emphasize that we cannot have a healthy economy grow without offering solid support to our MSMEs. So feel free to talk to us at any KCB bank branch near you. And I do hope that we will be able to interact and to walk this journey with you even as you grow your business. Thank you and for your attention, and I look forward to engaging with you even more. Asante.
Thank you. Thank you very much, Naomi, for the comprehensive overview of KCB, the product offerings you're having and how you're supporting SMEs to access this credit guarantee scheme. And now, ladies and gentlemen, we are now open for the question and answer session. It's been a wonderful time to listen to the presentations, and you could direct your questions to the speakers. Today we've had Ms. Phyllis Wakiaga, the CAM CEO. We've also had Ronald Inyangala from the National Treasury, Senior Deputy Director, who is also online to respond to your questions. We have Geoffrey Eshane, a beneficiary with the Nutrilinks company, the Managing Director. You can also ask your questions to him. We have Anthony Kinyua from Cooperative Bank and Naomi Ndele. And some questions have already been posted on both the Q&A side and the chat side. And I'd like us to start with those on the Q&A side. The first one is from Stella, which asks about how to pay, how to access, how to know your worthiness. And that was responded to earlier by the banks. There's also the question from Mark Booney on when we approach our bank or finance, how do we know if it is being considered under the scheme? This also was responded to, but I've seen Geoffrey Eshuke would like to respond to some of these questions, and you're welcome to do so. The other question is the qualifications for a business to access the scheme. I think that was adequately responded to. Job, I hope you're okay with that. Job Mumia. We could also answer live directly. The panelists could also answer live to some of the general questions that have been asked. There is also a question on how do you become a member of CAM, the requirements to join CAM as an SME, and also how to access finance. That will be responded to. And there's a question from Karanja. Why is there no agricultural research on the improvement of indigenous seeds, animals, and natural fertilizer? Probably, Geoffrey, you could respond to this. Elizabeth, what explains the low participation by the agriculture and manufacture sector? Could the problems of these sectors be elsewhere? Does the guarantee reduce overall interest rates? And how does the bank reduce the risk? We could have both the National Treasury, Ronald responding, and also one of the banks. There's a question also from Elizabeth again, where the question is around the interest rates being quite high in her view, but the overall cost of manufacturing is very high. The margins are low. The economies of scale for SMEs are low. So how can really, it's tedious to do marketing and distribution. We've had the bank saying they have a capacity building support or advisory services on these areas. We could have either Naomi or Anthony responding to that. There's a question from Kairanja. Banking interest rates in Kenya are simply too high. Probably we could hear an overview of how the rates compare to the others. In his view, they are prohibitive and punitive and do not support growth in any way. So this affects the ability of businesses to pay living wages and also make profits and grow. There's a question for CBK. They're not here, but if any of the banks is willing to respond, there's a question on how CBK makes policies to support Kenyans, independent of the IMF, World Bank, and Shylock debtors. There's also another question from Elizabeth. Access, challenge is not just access, but also cost of financing. It's similar to the other question, but here there's comparison of the Middle East, which is said that the interest rate is less than 3%. We could have this explained by the banks. And does this explain why eggs from UAE are cheaper and all that? Anonymous attendee, to Naomi specifically, what is a negotiation fee? And why would you charge 2% extra on top of the interest rate? Naomi is typing the answer there. So some answers can also be typed directly. To KCB and Co Bank from Orina, how long will it take for one to get the loan after making a successful application? We have ARC Ventures, can you help us in finding an investor? We have Taher, is NCBA part of this? We were given the list of those who are part of the guarantee schemes, the 7 banks by the National Treasury, and that can be shared later. The other one is wellness of industry from Lisa. Expensive labs to qualify products, the fees to identify vitamins and minerals is astronomical. Hence, Kenyan labs do not have capacity. How can we get assistance? I think this can be answered differently from a separate forum. Some of the questions we can compile the answers and share unless they are directly affecting the current presentations. So with those questions from the Q&A section, I welcome the speakers to respond. We could start with Geshane as I review the other questions in the chat. Thank you, Geshane. Geshane, you had proposed to respond to some of the questions. Geoffrey, maybe you can unmute. You are muted.
Yeah. Just a minute. I'll talk about the research on one question somebody asked about the research on agricultural research. Agriculture research in Kenya is done directly done by CARO. But there are JQuat and the agricultural universities. You can get research done, but it is very difficult for anybody to, without information, you cannot get the research done. But CARO, you get the results. Also, we have KEBS. KEBS, they do tests, and because most of the products that are not researched, you give to farmers, they cause more harm, because you will get a product that is imported and indicating they have all the minerals, but when you take to the research stations, you find there is nothing. It's just a block of salt. So I recommend you go, if somebody needs any research, you go to CARO and the universities. They will assist. Thank you very much.
Thank you, Geoffrey, for the response. So you've led us to where else we can access research. We can now listen to Anthony, some of the questions raised, then Naomi.
Thank you. I'll pick on some of the questions and also be active to ensure that the ones in the chat are also ensure that we answer them. I want to pick on a specific question that was asked on the advisory bit, and I will say this as a bank, we have two. Number one, we have what you call a non-financial arm of the bank. Non-financial arm of the bank caters for especially a lot of MSMEs. And every Thursday, we have a training and a webinar. It's usually online from around 11 to 1 p.m. Online. And how we pick the topic is it's purely on demand. So ask MSMEs, what do you want to learn about? We have targeted, sometimes is even targeted. We target professionals or certain sector. And then we'll also invite experts within the bank or outside the bank or the partners just to disseminate the information. That is one. We also do networking forums. Networking forums is where now the banks goes to some of the cities or towns and sit down with a group of SMEs or MSMEs and have a chat, and again have an open and a candid discussion and network and try to create linkages amongst themselves. Number three, we also have exposure trips. I think COVID did temporarily stop, but we are seeing things now have eased up. So we are underway, commencing now those exposure trips so that you're able to go out there. There's someone who commented about the margins that we are making as MSMEs are very low. So then how do you then even go out there and enjoy the economies of scale? I've seen MSME who go and buy, make directly from the manufacturers in China or other countries and buy in bulk with finance, and they're able to enjoy the economies of scale. Then we also have now the online portal that now you're able to get all these materials, all these new development for your own information, for your own news, because knowledge, as we say, is power. So we have all these archived in our portal. I have shared the link. You're able to now find out what is happening, what are these red tapes, even when the government has certain restrictions, what are those? So we put as much information as possible. Then the other bit is we also have an arm called COP Consultancy. And especially this is also good. This is a team of experts who are also able to evaluate and advise you on all matters business, whether at an advanced level or even at a more so on a medium level. Those who of us are on a journey to become mini corporates or are already corporates, or those of us who are in groups and circles, then are able to get that advisory free and service and guidance from a COP Consultancy. That's a subsidiary of the bank, but have experts. Then there was also a question before I usher in Ms. Naomi also on how long does it take? Yes, we have explained on the requirement, how to qualify. It depends. If you're coming for unsecured, and especially within the branch limit, then within 2 days is done. If you have an existing charge with us, or there is an existing security, or is a charters, again 3 to 5 days. When you are doing a new charge, when you are bringing in a tangible, to be specific here is a landed property, then it will take 3 to 4 weeks, because we have to do the valuation, you have to do the charging, and there are also external parties involved. So go 3, 4 weeks, and especially and you'll be lucky within the 3 to 4 weeks. And it also has some other external factors. The government, there is the legal system in Kenya. So we'll say an average of 3 to 4 weeks. I think that's maybe I can usher in Ms. Naomi also to maybe tackle 1 or 2 questions. Thank you.
Anthony, I think I have answered a number of them on the chat. And so in the interest of time and not to repeat ourselves, I had also spoken about the advisory and the non-financial services, which can be accessed through our Biashara Club. In terms of how long a facility will take, this is really dependent on what it is you are seeking. Is it secured or unsecured? Is it asset-based finance, or is it a trade finance solution? So they all take different lengths of time. Feel free to engage me. I have shared my email so that we can understand what exactly is the need and the facility that you are looking for. Then we'll be able to give you some timelines. I don't know if there is a very specific question.
Okay, thank you. There's another question here, Naomi, you can attempt. The challenges facing MSMEs. There's an interesting question here that the government rates and commercial bank rates are at usually 12%, yet employees can access up to 3%. Probably you could explain the rationale of how you arrive at 3% for employees and why then 12% or higher for SMEs. Thank you.
Thank you. I hope not to indulge in the area of interest rates because these are regulated by the central bank, but just an overview of how they are arrived at. And if this is a question that was relating to the Middle East, each economy and each environment is different because of the prevailing circumstances of the economic environment. But broadly, if, for example, the one that talked about employees getting 3%, usually you will find those are funded schemes where an entity puts in money given to the bank to lend to the employees, and that's the reason why the interest rates come down in the sense that it is not using bank capital to lend, it is using a funded scheme which is provided by the employer. So it would be that the employer actually subsidizes the rate. In terms of whether it is 12 or 13 or 14 for businesses, especially in Kenya, it is currently regulated by central bank, hence the reason why we may not go way above the 12 or below the 12 because we need to stay within the guidelines of the central bank. Thank you.
Thank you. Thank you very much, Naomi. So there are guidelines, regulations, which we can familiarize ourselves with just to build our confidence around what the market is offering. There's a question to Ronald Nyangala on the Treasury. Some SMEs have a lot of cash trapped in KRA in form of refunds, which is a big problem. How can Treasury help SMEs access their funds or refunds, or even help their credits from KRA on yearly basis to unlock that capital? Ronald?
Thank you. Thank you, Joyce. I already saw the question. We note the challenge that MSMEs may be going through. This could be the VAT refunds. We, as Treasury, have made a lot of efforts to make sure that the process is faster. We also, like the CGS, we have a direct link with an MSME desk at KRA. So that could be one of the ways you can get this unlocked. We can link you up with the SME desk under KRA that is happening, that does that kind of thing. So that could be the only thing. But of course, it's not with KRA does its work independently from Treasury, but of course, with support from our end. So we note that, and we hope that we can support. I must. After that, I must really say I'm very happy with Geoffrey Kishana. I think this is one of the best things that happened this morning. You really made me happy to hear your story. And we want to hear more of these stories on the market so that we know that what we are doing has impact. And we will appreciate if we can, and I don't know whether COP Bank will be willing if, of course, we can begin to have an engagement. There are various support that are coming on board, including World Bank, in terms of technical assistance. So could there be things we need to do in terms of supporting such SMEs to even grow more? I mean, those are the things I was contemplating. So, I mean, it's important to pick up these good lessons that are happening on the market. And the question of why agriculture is still low, we are also concerned. And of course, the manufacturing. And what we are doing is what we are doing continuously in terms of these engagements. So our offices are open for engagement in terms of what we are doing. We want to grow this product. I want to confirm to you there's a lot of interest from the development world on the guarantee scheme. And we are waiting for the banks to tell us they have exhausted what we guaranteed them to them. Any bank that will tell us that we will issue another guarantee to them immediately. That is the commitment the government of Kenya has on this product. So we're waiting for you borrowers to go to the banks, get your loans, and they will be under the scheme. So you should be assured that the government is committed. We would like to work together this journey and move this country to the next level. Thank you.
Thank you, thank you. I know, Ronald, you had mentioned the banks that are part of this scheme. Somebody is asking if NCBA is part of it. Maybe you could just mention again the 7 banks that are currently in the scheme.
The 7 banks are ABSA, Credit Bank, Diamond Trust Bank, KCB, Cooperative Bank, Stanbic, NCBA. I think those are the 7 banks. I don't know whether I've forgotten any.
Thank you. You've just answered that NCBA is part of the scheme.
NCBA is part.
Yes. There was I know you've tackled the question a little, but there was a question of if there are other things affecting manufacturing and agriculture sector in accessing these funds. I know you had said there's a low outreach. And so, you know, are there other reasons why in your research they are not participating besides low outreach?
I think one of the reasons, and I think I had just forgotten, I noted that Geoffrey said that the amount, the loan limit could be affecting manufacturing. Of course, we know in terms of what you need to do manufacturing, it may require slightly more. So we are also reflecting on that part of the design so that we could have some window. For agriculture, there could be issues of how the sector is perceived in terms of risk. What are we doing about it? We have a project that we are designing with IFAD for the smallholder farmers, and we'll be rolling it out in the due time. So there's a lot of things we are doing from the government end, and this is the most sustainable way of financing our people. Any other may, of course, be okay, but this is what we are telling you, this is what will work. So for the agriculture sector, we are looking at an IFAD program called RK-FINFA, Rural Kenya Financial Inclusion, that would help us reach the agriculture sector and help it to grow. So for that, I think that's how we are dealing with the problem, one step at a time. And we note the risk perception that are like in agriculture. And then for the manufacturing, it could be about the loan limit. It might be easier to do trade with 5 million, and you may require more for manufacturing. And that we take note. We are quite on top of things. Does that attempt to answer?
Yes, in my view, it attempts, and the person who asked could probably ask again, and we can consolidate responses. There was an interesting question, Ronald, which I can also just tweak a little. How a question around the funds that come through MCEA. I just needed to hear whether you are linked through the other mechanisms, whether it's KIE or KDB. Are they also going to access the credit guarantee schemes, or are they having their own system? The Kenya Development Bank, Kenya Industrial Estates, and such.
We have many programs that government is undertaking, including a support program from World Bank that will be seeking to reach to our MSMEs through other channels, including the development finance institutions like AFC, KIE, and KDC. That is still in progress. We are still developing that. In terms of the MUSEA Fund, I think I may not have the response. MUSEA Fund is a separate fund under the MUSEA Act of 2012. As of recent, it have not been actualized as a fund. So that's what the information I have. But of course, there are indications that it could be done. KIE is an entity that is already doing financing on the market. And of course, it's under the Ministry of Industrialization. So they're already doing financing on the market. And it's not under the scheme as of now. But there are other products that we are developing that would come through those kind of initiatives. So it is a holistic ecosystem that we are trying to put in place to reach our MSMEs from where they are.
Thank you. Thank you so much. I believe we've come to the end of the Q&A session, right on time. And I appreciate all the speakers, starting with our CEO, CEO of CAM, Ms. Phyllis Wakiaga, the National Treasury. We are very grateful and pass our regards to your team. And we look forward to partnering. I've seen so many opportunities for partnership, starting with what we are doing today, outreach to the manufacturing sector and also agriculture because of our agro-processing role in the value chain. So thank you so much, Mr. Ronald Nyangala. We also want to appreciate Mr. Geoffrey Geshane, open to telling your story and also how you're improving cost of products here in Kenya through import substitution, looking at your competition, very interesting ways of assessing the market, competition, imports and exports, and then how to build your business locally. And at CAM, we are keen on helping industries develop local content in a competitive manner as they grow industries. So we thank you so much for the innovation that you're bringing to this country. And hopefully we shall visit you, Geshane, and understand your network and how people can also benefit from all these financial solutions on offer, starting with the credit guarantee scheme. And we have a promise from Ronald that the limits will go up. And I like what Geoffrey did. You already said, please consider 15 million. If you wish to go upwards, that's okay. So considering the size, the scale, and also the capability of manufacturing sector and their needs, please consider increasing that, and we shall follow up with you, Ronald, on how then the scheme grows. Thank you so much also to Anthony Kinyua, Cooperative Bank, Head of SME Banking. We are grateful for your information you've given us about Coop Bank and also other products that people can have alongside the credit guarantee scheme. Naomi Ndele, also we are grateful, KCB, Head of SME and Agribusiness. Thank you so much for also telling the story of KCB and how we can access you and the opportunities therein that our SMEs can access. And that's just some of the discussions. This is the beginning. Accessing finance has been identified as a big issue by SMEs, especially with the COVID pandemic that came through and affected many of the businesses. I was just speaking to an SME yesterday who told me about 50% of all their micro businesses in their association shut down during COVID time. And coming back up is a challenge, and they're reconsidering looking at new business opportunities, new business models. So a lot of capacity building is necessary for some of the entrepreneurs that are already out there and have tested the market with different products. At CAM, we are critical in identifying opportunities for SMEs through our SME hub, and we are grateful to work with various partners to help drive the growth of this economy, also to help formalize the huge informal sector that is contributing heavily also to the GDP of this economy and also a lot of jobs. Would like them to join us in the formal sector so that we can have a more sustainable growth agenda together with them as we recognize their role in promoting SMEs and promoting this country. So in our manufacturing priority agenda, we've highlighted SME development as a critical role to drive the future of industry, helping them grow and also helping them to participate in the local, regional, and international supply chains. And through our manufacturing hub, SME hub, we've prepared various programs that can nurture and help grow the SMEs. And we urge all the SMEs here and also those who are yet to join CAM to join the SME hub. And there was a question on how to join CAM. I wish to invite Rose to just give a brief. Rose is in charge of SME recruitment at CAM. I hope she has joined the call. Rose, are you on call?
No, she's not on call.
Okay. So Nduta, maybe you can give a quick brief and then later those who are interested, we can share with them the package for membership on the SME Hub. Nduta?
Yeah, thank you, Grace. For you to become a KAM member, we need to know your category, and how we know that is for you submit your audit confirmation. And there are quite a number of forms you need to fill because we have two types of membership. We have an associate member and we have an ordinary member. Associate members are members who normally offer services to our manufacturers. And ordinary members are members who basically do the manufacturing and value addition. So the importance is to know that you are a registered company. We also need to know what you're manufacturing and where, and basically filling the appropriate form. Like I said earlier, is based on your turnover. So yeah, so you can the participants that you can send me an email, mduti.dirango@km.co.ke. I can be able to understand the kind of business you're in, so that I can also be able to send you the respective form. So yeah, and good to note is because we have a micro SME category, so that should not work you out. For as long as you're in some form of value addition, we have a category for you. KM is basically open for manufacturers, or micro, small, or medium, or large companies. Yeah.
Thank you, Nduta. So I just wanted to conclude on, first of all, sharing the opportunities that are there under the SME Hub and some of the partnerships already in place. For instance, we've partnered with Nairobi Securities Exchange and Capital Markets Authority to encourage venturing into the capital markets. They're also looking at attracting the SME segment into that area of accessing finance. We have a robust governance program where we engage retired experts who have retired from the manufacturing sector, probably engineers, experts in manufacturing, experts in various areas, probably quality control. I had, challenges around market access, distribution, and they expired they are retired like over 60. So we have a program where we're engaging them to work with SMEs directly and support their growth. We also have advocacy strategies where we help SMEs to articulate their challenges, and then we package that to engage government directly. And I'm glad one of the key areas is on the definition of MSCs under the MSC Act and the missing middle. And I've seen Ronald has captured it already in his presentation as a challenge, and I'm glad it's already understood in government. But you've captured more the contradiction of definition around number of employees and turnover. For us, it's just clarity on that, because then it affects how we engage or access different opportunities, like now financing, and somebody can lock you out by saying you are not part of the SME group that they're looking at. So we will be engaging you, Ronald, to clean up that together with the other stakeholders on the definitions, criteria that are being used in the Act. Luckily, there's a review that is due for MSC Act, because we just launched the MSC policy last year, which came after the Act, long after the Act. So there's a demand to have the Act reviewed in line with the new policy. The other area, and that's just one of the advocacy areas, the others, of course, are strong on matters taxation and finance access and others. but we welcome SMEs to join the membership and to join the table in sharing their issues so that we can help improve the business environment here in Kenya for SMEs to thrive. We have mentorship programs. They are all free of charge. We link you to mentors who are working in the manufacturing sector. And we've identified certain areas that are critical like finance, sales, HR, procurement, marketing, risk profiling. There are different areas we've captured that are generally affecting SMEs. And we have mentors in our profile that we can link you to. We also have board of advisors. We realize a lot of SMEs don't have a governance structure beyond the owner. So we've invited them to partner with us to have board of advisors, a minimum of 3 at least in specialty areas that you feel you have a gap, and they can be a good sounding board for you as an SME in just structuring your models and being a sounding board in helping monitor your work instead of being a lone ranger. Most micro and small businesses are lone rangers, and they feel constrained in having new ideas, new networks, connections, and markets that the board of advisors bring along. We have also a lot of capacity building programs, and we look out to partner with the banks, especially the exposure visits and others. We have opportunities for that. We also have market platforms where SMEs can showcase their products, and we invite the banks to partner with us to help SMEs showcase their products in exhibitions that we have locally. And issues of standards and quality assurance, we partner with agencies like KEBS, HIPPI, and others to help SMEs align and comply with the required standards, and also patenting and just secure their business in this country. We have recently started a robust program on subcontracting and contract manufacturing. So we'll be approaching the banks to consider funding SMEs that don't necessarily have an asset in their name, but they have partnered with the manufacturer who's producing for them. So there are many opportunities there for innovating financial solutions for our SMEs. And finally, we have various boot camps that SMEs can participate in, and we invite SMEs to register once they see a call for this. So generally, adequate access to finance is required in this market. We are competing with the various sectors. We've just heard how imports from various countries are quite competitive here in this country. The imports will increase with the onset of the Africa Continental Free Trade Area. We have AGOA. We are coming up with other partnerships, European partnerships like with Britain and other European countries, and negotiations are ongoing. So definitely imports are going to increase. For us, we are looking at how to help SMEs identify opportunities for partnerships with all these businesses that will be flooding the Kenyan market as we scrounge for African markets. I was in a forum the other day for Africa-Japan forum, and we realized that Africa is currently a bride with very many suitors looking to engage Africa. So we need to choose the right suitors, our suitors that we can work with and partner for growth. So thank you so much, and we wish to appreciate all our partners, as I had earlier said, and let's work together to unlock opportunities for SMEs and make Kenya a successful economic country that with high economic growth and support the policies that are out there. So I wish to also thank the team that has helped prepare this, starting with Nduta Ndirango, who is our SME officer. And for any further questions, you can write to her. We also have our communication team led by Grace. So we have Grace, Faith, and Rosemary, who have supported us in ensuring that this project is happening well through the webinar, and also communicating the same to you and to other members. And our policy team, who have also done extensive research on credit guarantee scheme. So thank you so much, and we look forward to engaging you more and more And thank you so much, our members. And let's continue building resilience and sustainability of our businesses. Have a lovely afternoon. It's not yet afternoon, it's still early morning, but have a lovely day. Thank you so much. We've come to the end of this webinar. Asanteni.
Thank you and bye.